Hey guys, Mike here. So, boy, we got a big week ahead of us with bank earnings finally starting to kick in. We're going to have some other big earnings as well, like Taiwan Semiconductors. You're going to have inflation data coming in early this week. And then, of course, we already know we're in this trend down. So now everybody's waiting for this counter trend rally and stuff. It's going to kick in or not. So we'll look at higher time frames on the indexes as well as a few other charts to look at to take a bigger picture. And we'll also go into the data that came out Friday, which obviously is what drove us down. It drove the yields up once again, which, took us from like 3 rate cuts, now pricing in 1 rate cut, all that fun stuff, okay? And so I do want to start off with this right here, and this is the job data because, the story really does matter. Again, the economy is not the market is not the economy, but they're saying, hey, look, we added 256,000 jobs versus 165,000 estimated and everything, and then shockingly more than anything, the unemployment rate actually went down to 4.1 from 4.2, which I don't think too many people expected that one. And the key here, though, the real story to understand is most of these jobs are part-time jobs. Look at employed full-time here. The stuff has just been going down. I think we lost like 350,000 jobs month over month. But you can see that's a trend down, okay? So full-time jobs are going down, but they're part-time jobs. And we've been talking about this for 3 years. People say, oh, people are working 3 jobs, it sucks. But guess what? Key word in your sentence is they're working. That is the key. And the other thing is the government just continues to prop it up. You can look at these charts right here. Here's norm. That was like 2015 right there, 2020, and then look where we're at now. Even with coming down, we're still well above what norm was before the pandemic. They continue to send our tax dollars out to the states, higher at local levels, state levels. Just look at this chart. That's 2015 and 2020, and then look where it is now to the right. Now, it's like 3 times, 2 to 3 times what it was. And so, going to be interesting to see, how that plays out for the rest of the year and everything. But that's what's going on with the employment data. And, of course, that means less rate cuts, so the market's repricing everything. Looking at larger time frames, this is a weekly on the SPY. You can clearly see, obviously, RSI's trending down, broke the moving average, not below the 50 though. Bearish MACD cross right there a couple weeks ago. And so that's how we're starting out. So momentum, obviously to the downside. All right, so I put in every morning news brief. This is a downtrend, really more like your daily, your hourly, like good stuff. But when looking at this on the SPY, what you're looking for is momentum, right? Stochastic. So here's in the weekly. If you can get a turn up, right, and that'd be that counter trend rally, then obviously if we can get that bullish cross on there, then we could finally start to play up, or you get one of these where it turns up, we get the counter trend rally and then turn back down. That's what you're trying to figure out. I know like Jim Carsano, he keeps calling for like maybe this is a total of a 10% move down, of course, what he's looking for. We're about like 5.6 now. Or, is this a smaller move and then we get the bigger move later? Right now, when you look at the 20-week moving average, it held. Remember, this is a soap opera, so of course on Friday we hold on the 20-week moving average. We're below it and then regained it right at the end of the day, right there on the SPY, that is. And so, we've had some bounces. It has fallen below. That is a major moving average on the weekly right there. And you can kind of see what I'm talking about. It was below it, and I think I put in the Discord, I was like, hey, we're below it. We need a 0.5% rally back up. And, of course, they closed it right on top of it. Then you got the 100 moving average, bounce off that as well. So you have your 20-week and your 100 moving average right there in the same area. And so it did get a bounce to save it. But clearly, on a daily, you can see this is still in a downtrend. We are still setting lower lows, lower highs, okay? Even though what's crazy, you would think by now with all these days, it sounds like if you look on Twitter, we're down 20%. We're a little bit down like 5.3%, I believe it is. And these levels are key, right? Right there, that 50. We already put the blue line in before we put the 50 on there. But, that's going to be key, that area right there. You have a daily fair value gap, the 50 moving average, and you're sitting there with a key area to break above. And yet, once you break above that, then you're cooking, okay? But you got to get above that, right? We got rejected right off of that. And so this does put, if we break the 100 moving average, finally might get to feel this area where we had the election gap. Seems like quite a while, but here we are, okay, 2 months later. And so maybe we finally get that closed, which would be, a good thing. Honestly, I'd love to see it, but, this is drama, so won't surprise me if it teases for a while. But again, lower highs, lower lows, and they're barely breaking the lows, but again, breaking the lows, breaking the low, okay? So it's still lower highs and lower lows going on right there. Again, you got to get above the 50, above that trend line I just told you about with daily fair value gap. Before you want to talk about more upside. And again, just because it breaks that don't mean it's going to move up. But that's what you got to start doing before, obviously, you can break this downtrend right now. And so you look over at the Qs. This right here, we had put that trend line at the bottom down there. I think it was Thursday or something. No, it was Wednesday, excuse me. And so we hit that on Friday to give us our third touch. But again, this is another one. Some lower highs, lower lows. Okay, so that is a downtrend for now. And you can see clearly if we look at this, that's the area you really want to break above. That's the 50. Again, your golden pocket fib, stuff like that on there. This one, the election gap is much lower. So if you want to drop down that election gap, the Qs is going to have to drop about another 3% to get down there to close that one out. And you can see the Mag 7. Some of them have been holding up, some of them have not. But definitely IWM had it the worst because, see right there, broke that shaded area finally. And this is, I told you, this is the one that reacts the most to the 10-year, right? So when that strong data comes in, IWM is going to get punished and breaking that area, which of course will support, for quite a while it seems like. That's not a good thing because now that will become resistance if it tries to move up. You can see right below is what? 200 moving average. We've been talking about that one for weeks, it seems like. And so with IWM is simple. If it keeps breaking down, watch for a bounce on the 200 right there. But that shaded area, which was support, now becomes resistance. So you have to get above that to get any kind of love to the upside. Now, Nvidia, you can see this one right here. This is a key level. People are waiting on like 132, 133 to break. If that breaks, it opens up this area down here to 127. I think a lot of people will close out positions if it breaks 133 right there, it breaks that level, because that definitely opens up more downside. But, to the upside, I'd say you've got to get above the 51st, so around 138, 139, right in that area. And so to me, those are the two levels to watch for now. And especially if we break that 100 moving average, and we break the 100, yeah, I mean, absolutely, we're coming down to at least the 128, 129 mark right there. And so we'll draw this line right here just to keep it here at 133.86. That's what you don't want to see broken. And then above, look at 140.42 to break to the upside on Nvidia. AMD is just a mess over here, and you would think at some point in time it has to get a bounce, but it broke the shaded area again right here. False breakout up, move back down, and so you can clearly see where this one's at. And we'll pull a volume range, volume profile on this thing, but it's in a major discount area right here for sure. But it's not Nvidia, right? And this is what we talked about with earnings. There's fakers and makers, and this one definitely don't have the margins or anything to speak of like Nvidia does. But you can see it's starting to come into support right here, right? 107.87. So if the 114 area breaks, it's going to be 107, 108 is going to be in the cards for sure. So you're hoping to hold the 114 and then push back through that volume gap to the upside right there. That's what you want to see. If you can get in there, it can fly back up just like it flew down. All right, that is the key with AMD here. 114 has to hold. And then Tesla, looking at the higher time frame here on the weekly, you can see this is trying to hold these old all-time highs and trying to turn this area right here in support to continue to try to bounce and move higher. As I try to readjust this to shade it in, that is way too bright. And, if we can get that right there, obviously that's going to be good for the bulls to the upside. Again, now that we're in the earnings season, you're going to start seeing all these start to report earnings very soon, and so we're going to see what how the market's going to react to that. But for now, we pull this on a daily, and as we talked about, to the downside, you're just looking right there, 362ish, right in that area, be your 50, your 0.79 fib, what used to be resistance. So it'll be a resistance support flip right there. So it could flip prior resistance into support if it does move down, but a lot of people are looking for this one to get a bounce right here. The reason why they're looking for that, because on this move down for the indexes, this one's just been consolidating in a very small 4% range right here. And when Tesla consolidates, you usually get big moves. And a lot of people are looking between 410 and 414. If you see that trend line break to the upside, and then of course if this breaks to the downside, I've already told you where to be looking for. And so that's what you're looking for with Tesla. When it gets in these little areas here and just consolidates and just sits there in coils, you can definitely expect a decent move in either direction, because we don't know, right? Because the market has been weak, and sometimes Tesla will move against the market. The market may go down. Tesla's still green. It held up really well on Friday. And so if this does break that trend line right there, the descending trend line, look for 410, 414 in the cards. If it gets rejected, look for that 50-day moving average area. Palantir here obviously bounced on this 50 moving average back down at the bottom of the first little box right here. And so again, this is just one of those examples. You move up fast, the executives start selling, billions and billions of dollars worth of stock. Then finally, other people start taking profit, and so the air is, thin, right? And so you hope the 50 holds for them. If it doesn't, and here comes this area right here, right? Because that's really the only other kind of support you got. There's not much below that. And so just because of how fast this thing moved up. And so again, look at this to hold the 50. If it breaks the 50 and we start to see downward pressure, as you can see that tree limb right there held where that 50 is at, there's another volume gap, right? So take us down between 60, 61 before you hit the next one, okay? So that's really the key areas for Palantir. If it's going to see a bounce, if it does see a bounce from there, you can clearly see around 71, 73 is going to be the area you're targeting right there. It'll clear up that daily fair value gap. We'll see if it gets rejected from there to start to set another low. That's kind of what you're looking at. This has to start building out structure on those lower time frames, the higher lows and the higher highs. Now, Uber here is the last one, and it's getting a lot of talk because it came down this area where it has held at support multiple times. It did get that bounce right there. So it is above the horizontal trend line and the descending trend line and the ascending trend lines with 3 little areas, right? And so it did bounce. So if this continued, and a lot of people buying calls on this one, start setting out what would be a higher low right there on the daily, then it's going to start to build out something. So just check out 72 for the next area if this continues this bounce up. There's another one that's been moving pretty decent compared to the market, right? The market's been rough, and it actually had 3 green days, I believe, 1 red, and then another green on Friday. So this one's been countering what the market's been doing, because again, a lot of people been eyeballing this one. And so, when you look at earnings, there's going to be a lot of earnings next week, okay? Now, we're going to be with KB Homes on Monday, nothing on Tuesday, and then on Wednesday, we get a lot of the big boys, okay? JP Morgan, Citi, Wells Fargo, BlackRock are going to be reporting. And then on Thursday, Taiwan Semiconductors are going to set the tone. We'll see what they got to say. That's definitely going to affect all the semis. Goldman Sachs does not report here, so I need to take that one off. Bank of America, Morgan Stanley, Bancorp, PNC. And then on Friday, again, boatload of more banks. Fastenal is going to report. State Street's going to report. So all the big boys. And that's going to kind of set the tone. This is usually how we do it when we come into earnings and stuff. So we'll see what they got projected, especially what they see as far as how we're looking on our end. As far as the consumers, the big one is really what we're looking for to hear from them. Now, economic data Monday, nothing. Tuesday, core PPI, and then PPI month over month. Wednesday, here's headline CPI and core CPI. Empire State Manufacturing, crude oil inventories, beige book. So a lot of stuff going on there. Thursday, core retail sales, and then regular retail sales month over month, unemployment claims, Philly Fed manufacturing data. And then Friday, really nothing major. I mean, you got your building permits, your housing starts. We'll go over a little bit of the housing data tomorrow because it just looks like a hot mess with rates flying up right now for a 30-year mortgage, which is absolutely insane. And how much money you actually need to be making to even qualify to get these mortgages is so much higher than it was just, 3 years ago. It's amazing what it is. So anyway, hope you guys got something out of that, man, to set up the week. Please hit the like, subscribe button on your way out. Think about signing up for the membership, less than a McDonald's combo. It's everything you get with it right there. I'll definitely have some interesting members videos coming out this week for things for us to be looking for. And as usual, hope you guys have a great night, and I will see you tomorrow.